Ladies and gentlemen, Archivist here. If you are watching the main stage, you are already the prey. The media is currently parading a narrative designed to keep you sedated. They are talking about counter-narcotics operations. They are talking about restoring democracy in the Southern Hemisphere. They are flashing images of seized drug bundles and uniformed generals in handcuffs. If you are focusing on that theater, you are missing the demolition of the building you are standing in. Stop looking at the morality play. Stop listening to the State Department press briefings. Look at the energy maps. Look at the shipping lanes. Look at the black fluid that underpins every single green dollar in your digital bank account. The event that occurred on the 3rd of January 2026 was not a police action. It was a hostile corporate takeover of the world's largest proven oil reserves. It was the final, desperate gasp of a dying currency, trying to find a new host body. The petrodollar is dead. What you are witnessing now in the militarized ports of Venezuela is the birth of the petro hostage. The structure has fractured. The data I am about to read to you is forensic evidence of a crime scene that spans from Riyadh to Caracas. The victim is your purchasing power. The perpetrator is a system that has run out of time, run out of friends, and is now running on pure kinetic force. Let's dissect the corpse. You have been told that the global economy is suffering from logistical glitches or political friction. These are euphemisms used by economists who are too terrified to speak the truth. The truth is simple. The architecture of global trade is being rewritten by high explosives and naval blockades. On the 3rd of January 2026, the United States military initiated a kinetic intervention in Venezuela. The official story is a war on drugs. The official story is the arrest of President Nicolas Maduro for narco-terrorism. The mainstream financial press swallowed this hook without blinking. They reported it as a geopolitical stabilization effort. They laughed at the dictator getting his due. Haha, justice is served. That is the narrative for the tourists. Here is the reality for the operators. This invasion happened exactly 72 hours after the expiration of a critical timeline. We know from the intelligence files that Saudi Arabia, the anchor tenant of the dollar system since 1974, refused to renew the exclusive petrodollar agreement. Riyadh has turned its back on Washington. They have joined the BRICS bloc. They are selling oil for gold. They are selling oil for yuan. They are selling oil for anything except the unsecured debt of the United States Treasury. When the Saudis walked away, the US dollar lost its backing. It became an orphan currency. A fiat currency without an energy peg is just paper waiting to burn. Washington knows this. The Federal Reserve knows this. And because they could not convince the Arabs to stay, they had to find a new energy source to collateralize their debt. They looked south. They looked at the Orinoco Belt. They realized that if they could not control the oil in the Middle East, they must conquer the oil in their own hemisphere. The intervention in Venezuela is a desperate attempt to re-anchor the US dollar to a physical asset within the striking distance of the US Navy. This is not foreign policy. This is liquidity management with an assault rifle. The ports of Venezuela have been militarized. This is the critical data point that the stock market algorithms are ignoring. When you militarize a commercial port, you kill its efficiency. You introduce a risk premium that no insurance algorithm can calculate. The war risk insurance rates for tankers moving out of South America have gone vertical. This is not just about oil prices ticking up a few cents at the pump. This is about the weaponization of the energy supply chain. Why does this matter to you? Why should you care about a regime change in Caracas? Because this is the signal that the global financial system has moved from a consensus model to a coercive model. The era of free trade is over. The era of financial conscription has begun. The markets reacted instantly, even if the public did not. Look at the data from the intelligence report. The risk premium on global assets spiked immediately following the operation. Capital is not stupid. Capital does not believe the drug war narrative. Capital saw a superpower seize assets to cover its own insolvency. And what did capital do? It fled. It fled into gold. The price of gold breached $4,600 per ounce. This is not inflation. This is not a bubble. This is a vote of no confidence. When gold moves that fast, It is telling you that the market believes the dollar is no longer a safe haven. It is telling you that the dollar is now a liability. The mechanism is clear. If the US government is willing to use kinetic force to seize oil to back its currency, then holding that currency makes you a participant in the conflict. The world is voting with its feet. Let's talk about the bag holder alliance. Who pays for this? Who is on the other side of this trade? It is not just the Venezuelan people. The real victims are the allies of the United States, the sovereign wealth funds of Europe, the pension funds of Japan, the central banks of the G7. These entities are being forced into a corner. I call this state-level conspiracy. Washington is effectively telling its allies, you will buy our debt and you will buy this conflict oil priced in our dollars, or you will be cut off from the energy grid entirely. This is a hostage situation disguised as an alliance. The European economies, already starved of cheap Russian gas, are now being forced to rely on Venezuelan heavy crude, extracted under US military supervision and priced in a currency that is being debased by the hour. They are importing inflation to export stability to the US bond market. They are eating the toxic waste so that New York can pretend to be solvent. But the cracks are showing. The report indicates that despite this massive projection of power, the system is still failing. The bond market is schizophrenic. The 10-year Treasury yield is hovering around 4.17%, which is a lie. It is an artificial number. If the market were free, yields would be double that. But the Fed cannot allow yields to rise because the debt interest would consume the entire tax revenue of the nation. So they manipulate, they repress, and now they invade. We are witnessing the kinetic phase of the sovereign debt crisis. When a government can no longer pay its bills with tax receipts, it prints money. When printing money causes hyperinflation, it seizes assets. We have moved from the printing phase to the seizing phase. Look at the supply chain implications. The report mentions a ring of fire tightening around global resources. It is not just Venezuela. Look at the Red Sea. Maersk announced they are resuming shipments through the Suez Canal. They cited improved stability. This is a trap. It is a lie designed to lure tonnage back into the kill zone. The intelligence confirms that drone attacks on Russian tankers carrying Wagner personnel have occurred in the Mediterranean. The war zone has expanded, it has not shrunk. Why would Maersk lie? Because the economics of shipping are collapsing. They are desperate for revenue. They are risking their crews and their hulls because the alternative is bankruptcy. This is the definition of systemic fragility. When major corporations are forced to gamble with kinetic warfare just to keep the lights on, the system is already broken. The false dawn in the Red Sea and the drug war in Venezuela are two sides of the same coin. They are illusions of control projected by a system that has lost control. Now, let's look at the physical reality. The physical reality always wins against paper claims. While the US military is busy securing oil fields, the supply of strategic metals is evaporating. The report highlights a silver singularity. This is the critical flaw in the Western strategy. You can seize oil fields with aircraft carriers. You cannot print silver. You cannot bomb a mine into producing more ore when the grade has collapsed. The report confirms that China locked down silver exports on the 1st of January 2026. This was a calculated strike, a precision-guided economic munition. By restricting the metal required for solar panels, electric vehicles, and high-tech electronics, Beijing has checkmated the Western industrial base. And what did the US Mint do? Did they ramp up production? Did they solve the problem? No. On the 14th of January 2026, the US Mint stopped selling silver. They declared a soft force majeure. The government agency responsible for producing money ran out of the metal required to make money. Let that sink in. The US government can invade a country to get oil, but it cannot source enough silver to mint a coin. This is the asymmetry of the collapse. The heavy machinery of the empire is flailing, trying to grab tangible assets, while the subtle, complex supply chains of the 21st century are snapping one by one. The Shanghai premium is the scoreboard. Silver is trading at $100 in Shanghai. It is trading at $90 in New York. This $10 gap is not an arbitrage opportunity. It is a hemorrhage. It is the sound of physical metal being siphoned out of the West and flowing into the East. The COMEX is being bled dry. The London vaults are being emptied. The West is left with paper contracts, and the East is taking the physical bars. This is a wealth transfer of historic proportions happening in plain sight, disguised as market volatility. So, what is the connection? Why does the Venezuela operation matter to the silver squeeze? Because they are both symptoms of the same disease, the rejection of the US dollar as the global reserve standard. The Saudis rejected the dollar for oil. The Chinese rejected the dollar for silver pricing. The market is rejecting the dollar for gold. The US government is responding with the only tool it has left, force. But force requires energy. Force requires metal. Force requires a supply chain. And the US supply chain is broken. The report details a multi-point supply shock. Mines in Chile are striking. Mines in Indonesia are collapsing. Refineries are bottlenecked. The physical world is revolting against the paper world. You cannot print copper, you cannot print zinc, and you certainly cannot print the trust required to keep a global trade network functioning. The just-in-time delivery model is dead. We are now in the era of just-in-case. Corporations like Samsung and Tesla are bypassing the markets entirely. They are going directly to the mines. They are hoarding. They are panic buying. They know what is coming. When the giants start hoarding, the shelves go empty for the rest of us. We saw it with Costco selling out of silver in 4 seconds. 4 seconds. That is the speed of the panic when it hits the retail sector. This brings us to the core of the issue. The state-level conspiracy is not just about oil. It is about survival. The US government knows that if the dollar collapses, the power structure collapses. They will sacrifice everything to keep the game going for one more round. They will sacrifice the Venezuelan people. They will sacrifice the stability of the Red Sea. They will sacrifice the purchasing power of your savings. They are clearing the decks source concept. They are liquidating the future to survive the present. So, where does this leave you? You are standing on the tracks, and the train is coming. The train is named debt monetization. The train is named capital controls. The train is named war economy. The mainstream media is telling you to look at the pretty lights. They are telling you that the stock market is resilient. They are telling you that the Fed has a plan. The Fed's chairman is under criminal investigation. That is their plan. Chaos. The Department of Justice is investigating Jerome Powell. This is the end of the independent central bank. The executive branch is taking over the money printer. When politicians control the money supply, hyperinflation is not a risk. It is a policy objective. They need inflation to wipe away the real value of the debt. They need higher prices to increase nominal tax revenues. They need to steal your purchasing power to fund their military adventures in South America. This is the cycle. Deficits lead to printing. Printing leads to inflation. Inflation leads to social unrest. Social unrest leads to authoritarianism and foreign wars. We are at the foreign wars stage of the cycle. The Venezuela operation is not the end. It is the beginning. It is the template. Wherever there is a resource that the system needs to survive, there will be a crisis, followed by an intervention, followed by securitization. They will come for the pension funds next. They will mandate that your retirement account must hold a certain percentage of safe government bonds. They will lock the exits. They will implement capital controls to prevent you from buying gold or Bitcoin or foreign real estate. The resource denial protocol is in effect, but right now it is being used by the states against each other. Soon it will be used by the state against you. What is the countermove? The protocol dictates a complete disengagement from financial duration. Do not hold long-term government debt. It is a certificate of confiscation. Do not hold unallocated paper metal. It is a promise that will be broken. You must become your own central bank. You must shorten your duration. You must secure physical possession. The world is splitting into 2 spheres. The sphere of paper, led by the G7, backed by promises and coercion, and the sphere of hard assets, led by the BRICS, backed by gold, oil, and industrial capacity. The Venezuela operation was an attempt by the sphere of paper to steal an asset from the sphere of hard assets. It was a raid, and while it may have succeeded tactically in seizing a few ports, strategically, it has only accelerated the exodus. It has proved to the world that the dollar is now a weapon, and if you hold it, you are a target. The grey rhino is no longer charging. It has already smashed through the wall. We are now standing in the rubble, arguing about who broke the window while the roof is collapsing. Look at the data from the report. One last time. 1. The break in the silver market. 2. The militarization of the oil supply. 3. The criminalization of the central bank policy. These are not isolated events. They are 3 coordinates pointing to the same destination: a systemic reset of the global order. The illusion of stability is maintained only by the ignorance of the crowd. The crowd is watching the drug bust on TV. The crowd is happy. The crowd feels safe. The crowd is wrong. The Shanghai premium tells us the truth. The physical metal is leaving. The oil is being fought over. The bonds are being rejected. The architecture is burning. The fire is kinetic. The heat is financial. And the exits are few. This is the resource denial protocol. Assume zero delivery. Assume the supply chain will fail. Assume the currency will be weaponized against you. Do not wait for the official announcement. By the time they admit the crisis, the window will be welded shut. The price of silver at $100 is not a high price. It is the price of admission to the lifeboat. The last petrodollar has already been spent. It was spent on a missile strike in Caracas. The next currency will be born in the fires of this conflict, and it will not be printed on paper. It will be weighed in grams, in barrels, and in kilowatt hours. The structure has collapsed. The dust is just taking its time to settle. Archivist out. The protocol is active.